For years, we've all been hearing the same thing, right? That artificial intelligence is going to launch this massive new industrial revolution. But you know that initial excitement? It's starting to be replaced by some pretty serious warnings, and they're coming from the world's top financial institutions.
So today, we're going to dig into that. We're going to look at these growing warnings from huge players like the IMF and the Bank of England, because they're all pointing to the same conclusion. An AI bubble has formed, and we all know what happens to bubbles. Eventually, they pop.
Okay, here's our game plan. First up, is this AI boom a genuine revolution or just a really convincing illusion? Then, we'll break down exactly how a financial bubble gets made. We'll see if history is repeating itself, what all this could mean for a country like India, and finally, what we can learn from this whole cycle.
So for the last couple of years, it feels like the whole world has been celebrating the AI revolution. I mean, every company, every investor, they all wanted a piece of the action. But now, big organizations like the International Monetary Fund are starting to pump the brakes, saying, hey, wait a minute, these stock prices have gone way beyond what the companies are actually worth. And this right here is the heart of the issue. It's this huge disconnect. On one hand, you've got NVIDIA, valued at more than the entire economy of most countries. But then on the other, you've got a giant like OpenAI, valued at $500 billion, but with barely any profit to justify it. The math just doesn't add up. And get this, a recent study from MIT found that a whopping 95% of corporate AI projects haven't actually made any real money yet. 95%! So that really makes you wonder, doesn't it? Are we in the middle of a real industrial revolution, or is this just an incredibly expensive science experiment?
So how does a situation like this even happen? Well, financial bubbles aren't random. They actually follow a pretty predictable pattern. And if we understand these 6 stages, we can really start to see the potential danger we're in right now.
It always starts with a spark, some new world-changing tech like AI. Then, bam, the money rush happens as investors trip over each other to get in. This creates this kind of blind faith, where the hype becomes more important than reality. Values get inflated, sometimes by what's called circular funding, where tech companies just invest in each other, making everyone look more valuable than they are. Pretty soon, the whole market depends on just a few big names, and then all it takes is one little trigger for the whole thing to burst. And speaking of that risk, just look at this. This shows that concentration risk in real time. The IMF is pointing out that 40% of the entire S&P 500's value is now tied up in tech stocks alone. Think about that. The health of our whole market is basically riding on the success of just one sector.
This has created a really fragile situation. You know the saying, right? If Silicon Valley sneezes, the entire global economy could catch a nasty fever. A problem with just a handful of AI companies could literally trigger a collapse everywhere else.
And you can't get much more direct than this warning from the IMF. They're telling us, flat out, that while they don't know the exact day it'll happen, this bubble is absolutely growing. And, well, history gives us a pretty clear roadmap for what comes next.
You know, this whole thing feels familiar. And it should, because this isn't our first rodeo. It seems like every generation has its next big thing. And the pattern of hype, crazy investment, and the eventual crash is just eerily consistent. The parallels are just too big to ignore.
I mean, just look at this cycle. Back in the 90s, it was the dot-com boom, which ended with the Nasdaq losing 78% of its value. Then in 2017, it was cryptomania, which led to Bitcoin dropping 75%. And now, here we are with the AI boom following the exact same playbook. The only thing that really changes is the name of the technology.
The Bank of England is just as blunt about it. They're warning that as soon as the hype and optimism around AI starts to wear off, a really sharp, really severe market correction isn't just a possibility, it's inevitable.
So what does that actually mean for us? Well, the potential damage is huge. The IMF thinks an AI-related tech crash could wipe out 1.2% of global GDP growth. That's an enormous economic hit that would be felt by pretty much everyone, everywhere. A global shock like that would have different effects all over the world. So let's zoom in a bit and look at what this threat means for a major, tech-driven economy like India, which has been betting big on becoming an AI powerhouse.
India has definitely gone all in on AI. It's a huge part of their national strategy. But the IMF is cautioning that tying your whole economy to this kind of hype is really dangerous. If this bubble bursts, it could directly hit India's super important IT sector, foreign investment, and their financial reserves. The advice? It's pretty clear. Use AI as a tool to solve real problems in things like healthcare and education, not just as a ticket in a high-stakes lottery.
Okay,
So we've looked at the hype, the mechanics of a bubble, and the history. So what's the ultimate lesson here? What can we take away from this endless cycle of boom and bust?
Maybe the biggest lesson is about telling the difference between real innovation and a convincing illusion. See, true innovation has to be accountable for its real-world costs. In this big rush for AI, the enormous amount of energy, water, and precious minerals it consumes has been, well, mostly ignored. Without that accountability, you're not building a revolution. You're just building an illusion.
The IMF really sums it up perfectly here. Let's be clear, artificial intelligence itself is a real, world-changing technology. But the market bubble that's been built around it, that is unreal and totally inflated. Our focus really should be on developing what it can do, not just gambling on its price tag.
But you know, there is a silver lining in all of this. History shows us that after every bubble bursts, once the hype finally dies down and the dust settles, the truly valuable parts of the technology are what's left behind. The internet survived the dot-com crash, and it went on to actually change the world. It's very likely the same thing will happen with AI.
And that brings us right to our final thought. The patterns are crystal clear. The warnings have been sent, and we've seen it all happen before. History is practically screaming a lesson at us. The only question is, this time around, are any of us actually going to listen?